All right, I need everybody to go on Rumble right now and follow my page so you don't miss out on any videos or live streams. Anytime I share the links on X, they get hidden due to the fact that we are no longer allowed to post external links on X that get broadcasted out to everybody. So even if you have your notifications on X, you might not get it. So follow, turn the notifications on. That way you don't miss any of the free content I'm putting out here in the future. All right, what's going on, everybody? Welcome back. We are back here for September. Now, we did a monthly prep last week, but obviously, week by week, we do this every week. But the overarching pictures were painted last Thursday. So if you want an overarching or a higher time frame type of analysis, you could always check out that video that we made last week. But we're back. Let me just get settled in here. It was a long weekend. I really have not done any prep, so what I'm doing with you guys here tonight is there's no preparation for the prep this week. I usually try to at least have an idea of something that's going on, but all I knew going into today was the market was closed. So let me just come on over here. I got to open up TradingView. I shut down the whole computer when I was away this weekend. So but yes, if you haven't already, please drop a like on this. If you're watching on X or YouTube, I'm going to cut the stream. So come on over here to Rumble, rumble.com/@MandoTrading. And you guys can, you'll be able to comment and I'll be able to see what comments and all that stuff. Now, one thing that I'm going to shift up a little bit here. And typically these are, for the most part, breakdowns of specific tickers and everything like that. And while we do that, I think I'm just going to put a little bit more of an emphasis on the educational component to it. So you guys, I know there's a lot of newer people that are in and out, and at least kind of have somewhat of an understanding of what I'm talking about. I think that would probably be helpful. So I will break those down. So we might not rattle through as many names as we typically do, but my whole idea here is as much value as possible is a positive. And, if you guys could take something away from what I'm doing here, that's fantastic. So, all right. TradingView is booting up now. So, yes, you're late. You owe me a couple laps there. I'm just firing up TradingView. While I do that, let's pull over the economic data for this week. I like to start off with this. Now, if you're new here, you know that the data itself, the numbers and all that stuff, that doesn't mean a lick to me. I personally do not care. I couldn't tell you one data point, period. To me, all the answers are directly on our chart, and our historical price action, to me, would justify that. It's all just, to me, a little bit of a eye wash, or just a music to people's ears, I guess, because in reality, to me at least, and I would argue that with anybody, I just personally don't think it matters at all. So let me just pop on over here real quick to Forex Factory. This is where I get the calendar from. Come on, let's go. A little bit in slow motion here, sorry. All right, so Tuesday, 10 a.m. we have PMIs tomorrow morning. We also have that's red folder, ISM manufacturing PMI. So we have red folder at 10. I see the same exact thing at oh no, I see final manufacturing PMI. That's yellow folder. Not as worried about that. Wednesday we have JOLTS, red folder as well. And Thursday, we have ADP, non-farm employment change. That's red folder, good. 8:30 unemployment claims, red folder, good. 10 a.m. ISM services PMI. Okay, wow. So we have a lot of red folder data later on in the week. And then we have non-farm payroll on Friday. Okay, good. This is good. Okay, so like I said before, and I know it was, I kind of just ran through it rather quickly, but the point of me bringing up the whole, data discussion is because in reality, like I said, I don't really care what the data points are. I just need to have an idea of what time that's happening, so I'm not caught on the wrong side of something, if that makes sense, right? If I'm in something, you might just get a volatile move. That volatile move could stop you out, just be the liquidity grab in a sense to ultimately go to where you want it to go. But if you're going to get stopped out as a result of that, that's tough. So I try to avoid trying to jump in front of the data. And, of course you can anticipate price, but I don't try to front run things anymore. I used to always try to do that with like FOMC. And even if I was right, oftentimes that first move is in the opposite direction to go get liquidity, and that would take me out more often than not. So and you also might be asking, I don't know if anybody actually asked this, but you might be asking, what is red folder? Because I brought up the colors of the folders, and red folder, it would just be what we would kind of categorize as a high impact data driver, something that we would expect an influx in volatility coming from, right? So there are some data points that they come out and they might talk about them a little bit on TV, but they really don't impact how price is moving. Those red folder events, typically something like a non-farm payroll, FOMC, CPI, PPI, PCE, ISM. Those are typically red folder events, which we would anticipate there being actually some sort of aggressive move off of that. So, oh, cool. Yeah, somebody did ask that question. Great. All right, nice. So hopefully that helped. Now, anyways, let's get into it. I have my monthly chart here. You guys should all be able to see it right now. And like we talked about last week, we got into a monthly order block here, and we had a nice response to actually close the month green, which is pretty crazy. So far, so good. This is still not technically the most ideal entry for someone who's using my model, as anybody who would be using a model, either mine or similar to mine, you'd really be hoping for some sort of discounted price, right? And what does a discounted price means? And ultimately that stems from the idea of whatever our price swing was, we're getting to at the very least 50%, right? 50% we would consider equilibrium or fair value of that specific price range. And ideally you're going to get into an imbalance below that 50% mark in a bullish trend, which I think everybody would agree that we've been on since last October, and really forever. But more short dated or short time duration, still a bullish trend. But so that we didn't necessarily get into that on the monthly time frame, which doesn't necessarily have to. I mean, we went through names a couple weeks back, and we saw like 11-year runs where there was no monthly discount whatsoever. There were discounts on the weekly, on the daily, hourly, you name it, but on the weekly, on the big picture, we did not see anything getting us down into discount, which is fine. It can happen. But now from this point, I don't want to say that I'm on edge, because I'm really not. It is what it is. But it's just not really going to be the most ideal long for me, right? And the way that I always look at this is if I can crunch it down in time frame, which if you were to go over to the weekly, you would notice that, oh, whoops, let me map this out really quick. From your low from October to your high that we set back in July. Here's your discount retracement right off that 50% mark. Oh, where are my labels are gone. Hold on, I gotta fix this. I don't know why they're not there. Where's labels? And this is actually a good break in the action. Anybody who is somebody had asked me about this today with the fib things that I have. I don't use the Fibonacci's like to trade off of exclusively, but I use them to just map out ranges and stuff. You'll probably all get to a point where you really don't need them, but let's see. Okay, that's fine. Okay, there it is. All right, I was just making sure. But yeah, no, just for the visual idea, if I were to take this off and say, oh yeah, we got into discount, you would be like trying to eyeball it. It's just a lot easier for optics to see that there's your discount right here, 50%. Here's your first wick down into that bullish imbalance down here in discount, also taking out liquidity here. So anyways, from this point, ultimately, we got our discount satisfaction. We got into a weekly bullish imbalance that we ultimately closed out above it, right? So this week, I'm really looking to see us get a run into that Showtime imbalance. Okay, this is a bearish imbalance, untouched. I deem this Showtime due to the fact that at this point, I would not be totally shocked if price were to get into here and retrace a little bit from there. With the ultimate destination being those all-time highs again. That's my bias. That's where I'm kind of, eyeing here over the next couple of months. And, I would kind of break that down into just simply low to your high, your discount retracement into a bullish imbalance. Okay, this is just my model. This is what I look for, whether it's on the 5-minute time frame, the hourly, a weekly, it doesn't matter. It's always going to be the same, that same setup. And the more and more you see this, or the more and more you hear me talk about it, the more you're going to see it. And you're going to say to yourself, wow, this really does actually happen quite a bit. Because it does. And it's essentially just how the market operates. Okay. So every single one of these runs is just operating, another one of these Mando models inside. And if you don't believe me, put a chart in there in the chat right now. We'll go through it. And I bet you there's a million of them. For whatever reason, it's just how this algorithm that's delivering price is programmed. It's very repetitive. So, but anyways, so from this point, we got into the bullish imbalance, ultimately looking for higher prices this week. With that data towards the end of the week, I think that's pretty encouraging. Now, with a non-farm payroll week, which typically is the first Friday of a new month, the day prior to that, you're going to notice that price action is usually pretty terrible. I know I've been a broken record with this. Every time we do the weekly prep for the first week of the month, I say the same thing over and over again. And for those of you who've been around for a while, I bet you could probably reiterate this and say that, yes, that Thursday is usually pretty trash. Very choppy, range bound, kind of awaiting data prior to, and then Friday's pretty clean afterwards, but just leading into it is usually pretty trash. So that's just kind of the overall idea here on NASDAQ. Now I'm going to flip over to ES as well. I tend to not really look towards ES as much just because I've been trading NASDAQ for a while here now. Although, realistically at this point, it's kind of fixed itself a little bit. For a while, ES was a laggard and NASDAQ was leading the way, and ES is totally caught up. ES actually looks a little bit stronger than NASDAQ in my opinion. But if you're to look at it from this perspective, same thing, right? We got down into this bullish order block. Bodies held this monthly bullish fair value gap here, or bullish imbalance. Also made a bullish volume imbalance higher last month. And this is where we currently sit. And we're only just a few points off that all-time high here on the S&P. So I'm curious to see how, if price were to get back up to those all-time highs, which I'm kind of, envisioning at this point, that enough for NASDAQ to do the same, or is NASDAQ actually not going to make that all-time high, get into the Showtime and retrace? And that is something that we would call SMT divergence. So that's divergence, or a difference between the two indices. Okay. And when that happens, typically, the one that does not take out the high, in this situation, it could be NASDAQ. I would view that as the weaker of the bunch. Where, is there potential for a liquidity sweep prior to that next move higher, where ES, you could kind of just see a discount retracement into a bullish imbalance. That's just all little things that I'm looking towards, right? And also on the weekly here on ES, which is SPY. For anybody who doesn't know, I chart the futures ticker, get a little bit more information by doing that. Now, we got into that weekly bullish fair value gap. See how we didn't get as deep as we did on NASDAQ here, but price gets in, ultimately looking for the next draw on liquidity, which to me at this point is those all-time highs. NASDAQ, like I said, a little bit weaker, but I think the draw on liquidity is this imbalance here on the weekly time frame at 20,084. So that is just the kind of breakdown that I got. I think this has the makings of what could be a pretty good week here. Also, this will be the last month in the third quarter here as we approach Q4 starting next month. So, it's kind of been on trend, actually. And, I'm not really all, I don't really trade off of this per se. It's just, I guess, just an observation that typically all year long, that first month of the new quarter has been a pretty bad one. That dates back all the way to, the first week of January, which was rough. That's the beginning of Q1. Where we have April? April, as you can see, this is the start of Q2. weak start to Q2. Here's the weak start to Q3. So it's actually been, pretty interesting to see how that is kind of a recurring theme throughout this year. Weak start to the quarter, strong finish. So we'll see what happens. But at the very least, I'm pretty bullish at this point, looking for the Showtime imbalance there, just a couple points higher. So that is what I have for the indices. Now, let me pop over here, check and see if anybody has anything. Yep. Okay. So I went over the red folder. I hope that was good. Yeah, it has Snaz. I forget. I'm not sure what that one was to. But I had posted a tweet yesterday for chart recommendations, and I'm gonna pull that up now. And like I said before, it's not just gonna be, all right, I think it's going here, blah blah blah. I'm, hold on, where are we? Okay, so let's pull up that tweet. All right. In the meantime, let me run through this. Oh, shoot. I didn't cancel it. All right. If you're on X or YouTube, sorry. Come on over to Rumble. It's easier. We can all communicate that way. I use the Rumble Studio. So cutting the streams over there right now. So rumble.com/Mando Trading.